The Dow has moved into overbought toppy area for a couple reasons. As you can see, there's some dojis forming up here. And that was after Thursday's gap up in the overbought condition. Remember, a very simple analysis that the Japanese rice traders have provided for us is where do most people buy? They buy exuberantly at the top. There's a very simple rule. If you see a gap up in the overbought condition, start looking for a sell signal. On the other hand, as of yet, we have not seen that sell signal. And although there was indecisive trading in the Dow and the S&P 500, the NASDAQ was still showing good strength. A very simple rule of trend analysis using candlestick analysis is if one index is showing strength and the other indexes are showing weakness, if they're not all in conjunction with each other, that means the probabilities are that the trend that is in progress is going to remain in progress. So as long as we know there hasn't been a sell signal in all the indexes, we can assume that we're in a slow uptrend. And even though it's a slow uptrend, there's still numerous candlestick chart patterns that reveal situations that can produce much greater than normal profitability. For example, our recommendation on NPTN was based upon this big fry pan bottom. And now we've had it break out above the moving averages, and the results are usually a very strong price move. We can kind of calculate where that price move might move to based upon other technical analysis that shows there's a gap up here at this level. So you've got the potential of a, say, a 15 to 20% upside in this type of pattern. Or the J-hook pattern, as we identified in our recommendation on AVXL. This is what we call the classic pattern. There's our fry pan bottom. There's our breakout. What do we expect after a fry pan bottom? A very strong price move. What's the prerequisite for a J-hook pattern? A very strong price move. And we can identify when that profit taking has occurred and when it's over, as we saw in the bullish engulfing signal as it backed off to the T-line, and now bullish confirmation. The probabilities are that if it starts trading positive from here, even, that our upside potential of wave 3 is going to be the same magnitude as wave 1, which means you still have approximately about a 50% upside potential. Being able to identify what's occurring in the markets in general and knowing there isn't any severe change of investor sentiment allows the candlestick investor to take advantage of the price patterns that we know work. Otherwise, they wouldn't be recognized today. And this is all the results of 400 years of Japanese rice traders showing us what human nature does time after time. That'll be it. We'll see you in the chat rooms.